I remember when I started analyzing HDFC Bank numbers, I was in conversation with Mr. Puri once, and I said, Mr. Puri, you've made life rather boring for television commentators because your numbers are very predictable. I'm getting a same kind of an feeler with Edelweiss also, that you've been consistent and your numbers are becoming predictable now.
No, actually not, not that much predictable. But see, we have a diversified financial services approach. So if you look at quarter to quarter, actually the various parts of the businesses are actually growing at very different paces. And you earlier said there has been all-round growth, but it's not been all-round growth. This quarter, though, we have clocked a 37% growth in profit after tax ex insurance. The components have changed significantly. It's been a great quarter for our credit business, especially retail credit business. Retail credit has a great growth in this quarter. Our asset and wealth management business also did reasonably well. Our capital market business had a slowdown because we saw that capital market activity, both IPOs and cash volume brokings and all, were on the lower side in this quarter. And our treasury, you know, we carry about 8,000-9,000 crores of government securities. That also got impacted because of the markdown in the bond in the GSEC portfolio we had. So if you look at the various components of our business, they move in a slightly different tandem, but it is in that context that having a diversified business approach allows us to maintain overall consistency and stability, while individual businesses can have their, different paces of growth.
Rashish, there is no denying that the numbers are good, and like Nikunj rightly said, you're one of the HDFC kind of steady stories really, and a good compounding story at that. We were just chatting about as to how in no time your stock has risen from 70 bucks all the way to 300 plus. But what people want to know is, what's the big vision? Where in the next 5 years is growth going to come in for Edelweiss? What's your vision 2020 in that sense, and what's going to be the biggest revenue generator for you from here onwards?
I think if I look at India in the next 10 years, the biggest trend is going to be what I call retail financial services. And if you look at households, basically on both sides of the balance sheet of the household, on the credit side, which is your retail credit, whether it's mortgages, SME, personal loans, all of that, I think households are under leveraged. They will borrow more as they consume and spend, because as growth is coming, confidence is coming, we will see a lot more households borrowing going up. So I think that part of the retail financial services, what we call retail credit, is going to be one of the fastest growing engines in the next 10 years for the economy and for Edelweiss. Then we have the other side of the balance sheet, which is the household assets. Households also save a lot of money. Currently, Indian households save between $500 to $600 billion every year. And earlier, a lot of that used to go in bank and real estate and gold. Now we are seeing that people are comfortable buying financial products, whether it is mutual fund, insurance, alternative funds, bond markets, all of that. So I think the biggest opportunity is going to be helping, catering, advising the retail financial assets, the balance sheet of the household, both on the borrowing side and on the investing side. And that, I think, is a next 10-year, maybe a 20-year trend. And for Edelweiss, we are currently very well positioned for that. We have got a lot of other, a lot of businesses aligned to that. We also have other businesses like our ARC, stressed asset business, and our corporate loan book, and our brokerage business and all. But I think the key ones where incremental growth is going to be very, very fast is going to be what we call retail financial assets, the retail credit, and the retail investment management through wealth management and asset management.
Good morning. Can we hear as well? And I just want to pick on that point, because I think going forward, the ARC as well as the distressed business is likely, and typically we've seen this right in cycles, that when distress turns around, the upside is quite big. You're sitting on a distressed AUM book that stands at about 43,700 crores. How much profit contribution do you see coming in over the course of the next 1 or 2 years from this segment? given the fact that, you know, a lot of these clearances are happening through the NCL LAT now for some of the bad loans?
Yeah. In our portfolio, we are seeing first, you know, a lot of restructuring has been done. So, if you know the ARC business, first you aggregate and accumulate the loans, then you do restructuring, then you start working on revival, and then you get recoveries. In most of our cases, restructuring has been done. We have actually recasted the balance sheets, converted some debt into equity, done a lot of things. So I think that phase is over. The recoveries will depend in two parts. Some will come through NCLT, as we are seeing things like SR Steel and others, and SR and Binani and all are in NCLT, which will hopefully in the next couple of quarters we see a fairly good recovery. In fact, the prices that are being quoted in the auctions in NCLT is, I would say, are even 10 to 20% higher than what the assumptions were a year ago. So it shows that the NCLT process has worked very well. The auction process is resulting in higher and better recoveries, and as a result of that, I think the NCLT process, I'm fairly bullish, but only about half of our recoveries will come through the NCLT process. The other half are coming through revival outside of NCLT also, and we are seeing like companies like Ballarpur and Karaikal Port, which are in our portfolio, are showing some significant growth in EBITDA and profits and expanding capacity and all, and also showing a fair amount of growth and potential recoveries in that also going forward. So I think the next 3 years, the old portfolio will go into recovery mode, but we are also acquiring new portfolios because we think still banks need to sell approximately 3 lakh crores of assets in the next couple of years to clean up their books. And even after that, ongoingly, we think NPAs of 3 to 4 lakh crores will always be in the system, because when there is a banking system, some steady state NPAs are always there, and those NPAs need work, those NPAs need effort of, you know, cleaning up, restructuring, recoveries, all of that. So I think it's a good long-term business. The current portfolio we have, I expect the next 3 years will be the recovery phase of that portfolio.